Hi everyone, welcome to Logical Investing with Shubhendu. Before we start this video, first of all, thank you so much for the amazing support which you have shown to all of the videos which I have uploaded in this channel. We are coming close to 300 subscribers, which is a big thing for me, and I really thank you for all of the encouragement and appreciation which you have been showering on me through the comments and the likes and the shares which you are doing with your friends and family and colleagues. I wanted to also tell you that some of the stocks which we have discussed on this channel have been doing really well. We have Gufic Bio, we have Basant Agro, we have Sham Century Ferrous, and many other stocks which are also doing great. Continuing that tradition, we wanted to talk about another stock today, but the intent of this video is not to give any stock recommendation. This sentence is for folks who are new to this channel. So the intent of this video is not to give you a stock recommendation. The intent is always to focus on building a process using which we can differentiate good companies from the rest of the companies. So without further ado, let's get started with our today's video. The company for today which we have picked up is Lux Industries. Now, Lux Industries have been in the news for quite some time, when there was a SEBI investigation on insider trading, because of which the stock got, hammered down quite a bit. You might say that, Shubhendu, if you are already aware of that, why are you even discussing about this stock on this channel? My thing is that this stock has got decent amount of beating. It had touched the levels of almost 4,500, and then it is right now trading at around 2,300, 400 levels, or maybe a little more than that. But first of all, let's understand, why is this industry important? Why is this company we are talking about? Why are we interested in this company? Lux Industries is in the business of making innerwear. As more and more people start being able to afford, their purchasing power increases, they would be able to afford more and more branded innerwear. We have all seen the growth of Page Industries. Lux Industries caters to innerwear for the regular daily usage, and also they are now getting started with their premium segment where the margins are even higher. My intent of looking at this is that as of this moment, Lux Industries has almost 15% of the market share. Let us take a look at Lux Industries in more detail. Alright, Lux Industries was incorporated in 1995 and has emerged as one of the largest players in the hosiery business, having a market share of 14%. I talked about 15, it's 14% of the organized industry. It's the largest mid-segment hosiery enterprise in India. The company has more than 100 products across 16 brands. Company's products are available in 450,000 retail points spread across India. So they definitely have a good deal of presence across India, right? And if we start looking at the key points which are there for the company, you would see that they have an extensive distribution network which is spread across the country with more than 950 plus distributors and 5 lakh retailers. Due to its efficient network, it enjoys a fill rate of 95% against the industry average of 80%. The company spends 8% of turnover in brand building. Megastars like Amitabh Bachchan, Varun Dhawan are the brand ambassadors of the company. The company possesses 6 manufacturing facilities across India with a cumulative capacity of 20 crore garment pieces a year. The manufacturing units are located in India in Punjab, Tamil Nadu and West Bengal. The company manufactures 100% of the products in-house with zero outsourcing. Now that speaks volumes that how they are able to build scale by bringing in cutting-edge machinery from Italy, Germany and Singapore, and it definitely focuses on upgradation and replacement of the old machines to maintain the high quality of output. So the company, through its wholly owned subsidiary Artimas Fashions, will be manufacturing and marketing a unique collection of socks, innerwear and sleepwear for 18 brand, which is endorsed by Virat Kohli. With this development, the company has been able to enter the premium innerwear market segment, which we just talked about. Presently, the export contributes about 10% of its revenues. The rest 90% is contributed by domestic sales. The company exports mainly to Africa, Middle East, Australia and Europe. So this is all about Lux Industries. Now let's take a look at the fundamentals of the company. The current price of the stock stands at 2,419 when the book value is 391. So trades at quite a premium to the book value. However, the stock PE, the price per earnings of the stock, stands at 20.1 when the stock enjoys a market cap of 7,275 crores. The overall results of the company stand at 1,170 crores, and the best part about this is the ROCE, the return on capital employed and the return on equity, both are very high and stand more than 30%. ROCE stands at 36.4%, ROE stands at 31.2%. The compounded profit growth in 10 years, it has been 42%, in 5 years it has been 40%, 3 years has been 52%, trailing 12 months is 63%. The return on equity has been consistently above 30%. The stock price, the cumulative average growth rate over the last 5 years has been 25%, over the last 3 years in 21%, last 1 year has been 30%. So this stock, is a fundamentally good stock. If you see the compounded sales growth in 10 years average is around 14%, which is a very good number. 5 years it is 16%, 3 years it is 22%, trailing 12 months is 31%. Clearly indicates that the sales are also picking up. The company gives out small amount of dividend yield is about 0.5. The debt to equity is really low at 0.12, free cash flow at 328 crores. Altman Z-score, which we look at, which should be more than 3, it stands at 10.2. The PEG ratio, PE upon growth ratio, stands at 0.51, which is good as long as it is less than 1. The current ratio and quick ratio both stand more than 1. Current ratio stands at 2.78, quick ratio at 1.52, which is again good for the liquidity of the company. Interest coverage ratio is the amount, the ability of the company to repay the interest of the debt. So the company has the ability to pay whatever interest the company is paying today. The company is able to pay 51 times the interest on that debt. So it's a very healthy sign. There is no problem with the company's debt obligations. Now, being a manufacturing company, we also look at the asset turnover ratio. The asset turnover ratio stands at 1.44. It's more than 1. So this is again a good sign. This is how the stock has behaved in the last 1 year. It started at 1855 in April of last year, and then currently it is trading at 2419 after making a peak of 4,500 rupees. This was the time where you see a major crash which has come in from 19 January from 3,800 levels. It has come down to almost 2,691 levels. This was the time when there was a SEBI investigation for the insider trading. If we start looking at the quarterly numbers, we see that in March 2019 the sales was about 386 crores. In December 2021 the sales stands at 658 crores. There has been a significant increase from where the sales were, quarterly sales were, to what it is today. The operating profit, if we start looking at it, the operating profit in March 2019 was 60 crores, which has grown to almost 142 crores in December 2001 quarter, which is almost nearing 2.5 times. Now, the operating profit margins in March 2019 quarter stood at about 16%. Right now, in the last 5 quarters, if you can see, it has been hovering around 20-21. Now it is at 22%, which is a very healthy sign. If you start looking at the net profit in March 2019 stood at 38 crores. Now that has grown to 103 crores in December 21 quarter. So the company overall has done a phenomenally good job in terms of generating profit and the kind of increase it has seen in its sales numbers. If we start looking at the profit and loss statements, the number would be more clear because we are looking at annual numbers. We see that in the financial year 2010, the sales was at 334 crores. In the trailing 12 months, that number stands at a whopping 2,285 or 2,300 crores. So it's almost 8 times of sales has happened from the March 2010 numbers till now. The operating profit, which stood at 10 crores with an operating profit margin of 3% in March 2010, the operating profit margin increased to 4%, 6% in 2012, 8% in 2014, 10% in 2016, 14% in 2018, 16% in 2020, 22% in the trailing 12 months. So the company's internal operational efficiency is increasing phenomenally. In the last many years, we have seen that the company is becoming better and better in terms of its internal operating efficiency. The operating profit from 10 crores in March 2010, it has increased to 492 crores in the trailing 12 months, which is a phenomenal number. Even if we compare it with the previous year numbers from 271 crores operating profit in March 2020, which was the COVID year. In March 2021, the number stood at 384, and in the trailing 12 months, it is at 492, probably 500. So it's almost 100 crores more in operating profit this year. The overall net profit has increased from 4 crores in 2010 to 361 crores in the trailing 12 months. The earnings per share has also increased phenomenally in the last couple of years, you see that from 1.75 to 3.31 to 5.59, 8, 12, 17, 20, then 23, then 30, then 40, then 71, 108, 125. This is a picture perfect earnings per share which has shown up in Lux Industries, and there has also been significant amount of dividend payouts as noted above. If we start looking at the balance sheet, the share capital has marginally increased from 5 crores in March 2010 to 6 crores in September 2021. The reserves of the company has grown significantly from 17 crores in March 2010 to 1,170 crores in September 2021. The borrowings of the company has also, they have been fluctuating for quite a bit. From 84 crores borrowing, they had gone up. The maximum borrowings at any point in time for the company was 329 crores in March 2018. That had come down to 181 crores in March 2019. Then it increased again to 220 crores in March 2020. In March 2021, it was at 101 crores, and in September 2021, right now the borrowing stand at 144 crores. The other liabilities also have been mounting, but as we saw that the overall debt to equity is still healthy. Now, if we start looking at the overall cash from operating activities, we see that the company has been generating positive cash from operating activities, 193 crores in March 2019, 163 crores in March 2020, and 393 crores in March 2021. Net cash flow has also been positive in the last 2 years. The company generated 78 crores of net cash flow, positive cash flow in the last financial year. If we start looking at the debtor days, they have been also improving. From 96 in March 2020, the debtor days have come down to 85 in March 2021. That number has been significantly improving since March 2017-18. The cash conversion cycle has also improved. From 313, it has come down to 194, which is again a very healthy sign. If we start looking at the working capital days, the working capital days has also improved from 168 in March 2020. Working capital days now is 124 in March 2021, which that basically means is the company is now in better control over its working capital financing. Promoter shareholding has been fairly constant from 73.71% in June 2019 to 73.95% in March 2022. The overall FII holding has grown in the last 3-4 years, and in the DIIs have also increased significantly from 2% to 6.6% in March 2022 quarter. And the public shareholding has reduced from 22.53 to 16.63% in March 2022 quarter. So this is all about Lux Industries. The company has been trying to do multiple stuff. It is trying to increase its overall sales. They have been fairly successful at that. They are trying to improve their operational efficiency. They have been fairly successful in doing that also. The company is trying to rope in brand ambassadors, which will make it more popular as a brand, and it will increase its reach, to all corners of the country. The company is also trying to get into a premium segment as well, so that it will be able to get more margins. So when all of these things are happening, and we have looked at the results of the last 10-12 years, and we have seen that the company has been consistently trying to beat its own numbers and make sure that it is better than the last year. The overall earnings of the company has been growing. The overall earnings per share has been growing significantly from where it had started and then where it is today. I strongly feel that the company looks good to me. Now, this is not a stock recommendation video. Please don't think that I have covered this stock and so you will immediately jump on the stock and then buy it on Monday. That's not how it would work. I wanted to tell you that every stock has its own positives and negatives. We are looking at the fundamentals of the company. We are looking at the financials of the company. We are trying to understand the overall sector and how the sector will grow, why people would start consuming more such kind of products. So all of that is fine. The stock has also corrected from quite a bit, so that's a positive. But there is the allegations of insider trading, that is the negative news. So when all of such things are there, it always comes down to individual investor who then has to think whether this is the right stock to get into, whether this is the right stock to stay invested in. My intention here is to tell you about the things which I have been thinking about, companies, how I plan my stock picking strategies, how I devise my own approaches. If some of these approaches are helpful to you, I would really appreciate if you could put that in the comments, what you liked in the video, what you did not like in the video as well, so that I can make effort to make sure that the subsequent videos, it is more palatable to what you are looking for. I keep saying this, every investor is different, every investor's risk-taking appetite is different. What might appear good to me may not really be that enticing to you. I would strongly recommend you that before you take any financial investment decision, do your own due diligence, do speak to your investment advisor, and then only take any decision regarding buy or sell on this stock. Thank you so much everyone for listening. That's all for today. Happy investing, happy logical investing.